Hey guys, so welcome to our live analysis session. Um, in this afternoon session, I just want to go through a couple of things that I skipped out in the morning, but I want to go through them again. So I'm starting off with the dollar index and our markings, okay, so that we can center ourselves to where the price is going at the moment. Now, currently, okay, and this is very important, you can see that the dollar index, when the price entered into this demand zone, we had quite a strong reaction. And now we've seen the price make even lower lows, and scenario number one, it's is very close to being an RTO. Now, judging by the price here, I get the sense that maybe scenario one may not be the final thing that happens, and there probably is going to be a second scenario that happens, but which is going to be scenario number two. Now, for us to verify this information, we need to see how the H4 reacts over here. Okay. Now, for me, if the body of the candle closes beneath this second body here, then we definitely are going for a short. Okay, so this is my first point of call as to what I would say. Now, looking at scenario number one, why scenario number one? Well, we had a supply price cap here where price was capped beneath this area of 102,400 for quite a while. Okay, and then after that, you can see that price really pushed short, broke above, returned here, gave us an induction, and then went long with a stop on south on the weekly. Now, the purpose of this price action was to come for this high, and you can see we've had a type 2 stop on source, an induction that doesn't give a full reversal, but a close to full, okay, which is very important information. Now, we filled out the buy order aggregate over here. Now that price has pulled back here, this pushback down should produce us a short, which I do see extending down further to about the 101 mark. This is the demand zone I'm looking for, really. And, you know, judging by the price, I do expect the market to probably reach there pretty soon. Now, I'm currently in USD CHF short, and I have a couple of other trades open. I'm still watching the price action to see how price is going to fare off, but it looks as though USD CHF is about to give us a very joyous ride. All right. I'm going to be watching to see how the price behaves, you know, as I go along with trades and stuff like that. But for now, it does look like we have such a strong short in our hands. And because of the speed of this short, I'm really considering, as I said, I've reconsidered whether scenario two is going to be the scenario. If I go down, sorry, excuse me, scenario one. Scenario two seems more likely because if we look across over here, maybe it's not so clear if I do this, so I have to keep this here. So let's use another color. Let me see what color I can use. Let me just drag this over here. So if I take this color and maybe make this something obvious like orange, like this, you can see that this bullish candle is a liquidity void, and the liquidity void ends at this demand zone here, which is scenario two as an entry. And if the market is going to go for a very strong long, which is coming very soon, and I believe, you know, this is driven by many fundamental factors, but the overarching one is inflation for a very strong dollar for the next couple of years. I do expect that the market is probably going to give us a very strong, extremely strong short. I can just tell. So for me, my consideration to all of you is that for us to kind of take advantage of it, I mean, Euro USD long and obviously USD CHF short. My consideration to you guys is that I think that we should look to scenario two. And at the break and flip of this zone, now I put this zone here because this is the demand liquidity that gave us the long. Okay. But we can also, what you can also do just to make sure is wait for this H4 zone to break here, which is at 102,511. So if the body of the candle closes beneath here, then we are definitely going for scenario two. If the price struggles in here, then we can go for a long, but I doubt that the price is going to sit around over here. Okay, now, you know, looking at the trades that we've had in our markings, you know, we've had some pretty brilliant trades go on. If I pull up, you know, where we are, so I'll show you my markings for Euros, USD, so that you can see what I was looking at. Share you that screen here. So if I go for Euro USD, maybe Euro USD looks a bit strange from here. See if I have another set of markings that I can use. All right, so I have no markings to use, so I'm going to do it from scratch, which is not a problem whatsoever. So let's do this. Now, if I start off a new chart here, I'm just going to go to Euro USD. So if we're looking at Euro USD, why did I go for the long? Well, on my funded account, I had an entry beneath this low over here. And the reason I had an entry beneath this low is because this induction here is an induction which is key to the last long that we need to see on Euro USD. So if I was to draw this here for you guys to see what I'm talking about, we have a shape here, which is our demand zone. And the price has given us, first of all, the low of the previous month has been taken quite strongly. Here we go. And then we've also had within the same low, the price has taken. So if I write this over here, so this is the first part. The price has taken the low of the previous month. Okay, this is this low right here. Then the price took the low of that week right over here in this week. And what's key here is that if I draw the H4 demand zone here, the H4 bodies stayed within this area, even though the wick went outside of the zone, which lets me know this is an induction and not a break beneath. If the body of the candle on any of the H4 candles had closed beneath this zone, then we'll be looking to go short. So this is why I'm in Euro USD long and USD CHF short. I'm just enjoying the ride down as they make their way, you know, for some strong shorting. I think I'm going to keep my positions open because I'm expecting the price to probably rally a lot further down than, you know, what I was previously expecting. So I'm just watching to see how the price behaves, basically. Yeah. So looking forward to, you know, what the price is doing at the moment. Let me just grab this. You know, the structure that we had that caused the price to go short was powerful. We had an induction of this high, previous daily high. The price gave us this movement. Now, the reason why I'm in the long from this bottom part, and I believe the price is going to continue long, is simply because when the price broke this structure here, and I'm going to draw this out here, we had a market structure break, but we didn't have a return to origin. And the other side of the story, which, you know, doesn't sit right with me, is if I look on the weekly, for example, here, we can see that the price is really edging above every weekly supply zone area. And we do need price to get here anyway, but it's strongly pushing above and has left a liquidity gap right over here. It might not be the most easiest to see, but it's a liquidity gap here. So I'm expecting price to fill out this gap. Now, this gap is at 107,696. And at the speed at which price is going, I do think that we are going to have an extremely strong push. Okay. And to be fair, on the short side, there isn't any reason for the price to push back short. So I'm expecting a very intense long, as it is kind of heating up already. I do expect now, this is the final long that we need until price gets basically here, when it gives us an RTO of the massive stop on that, you know, was triggered by the interest rate decision of the USA, or the Federal Reserve to be more specific. And that trade should take us into a very strong inflationary time in the market. And by that time, we should be, you know, raring to go for our very long-term short trades. Okay, so that is kind of like the schematic of Euro USD. Now, of course, on the H4 and the D1, it doesn't really look right because there's a gap here. But if you go down to the H1 to look at what's actually happened, the price has filled out this gap, pulled back into an area of demand it could find, and is going continually long. Now, the targets I have for this long trade, I'll show you what I was looking at. So the last major induction that we had, which caused the price to go short, was here. And it was a pretty cool trade. The price took the high of the previous week, okay, and then pushed short. And that gave us the first time we've really entered into this demand zone for a while. We had a long second, third, and now we go. Now, usually the market does things in threes. So this third induction here is the strongest one. And I expect it to produce, you know, the best reversal. And this is what we're having right now. Now, for me, my targets, I probably will close and re-enter because I just feel comfortable that way. You know, when the market gives you pips, it's nice to take them and then map out your re-entry. So my target, and the reason why I was more suspicious about this short that happened, is simply because the price gave us a short and it was in supply, but it wasn't inside of principal supply, which is this zone here. So we have a bit of unfulfilled efficiency, a small gap between where the price should have really shorted from and where it is. So that's my kind of view. Now I'm watching my trades as I'm talking to you guys because, of course, I want to make sure that close at the right time that I'm planning to. But my target is above this high. That's my first target that I'm looking for. So about 34 pips away. But I do expect the price to do a lot more than that. And I guess the easiest way to know if the price is going to do something like that is just to draw this supply zone here. If you draw this out, as soon as the price breaks above here, which it should do very soon, then we should be looking for an extremely powerful long, something of this sort. And when that happens, I'll be in. Probably that's going to be my next trade I'll take, and I'll ride it all the way up until we're done. Okay. Now with USD CHF on the reverse side, it's also a powerful short that I'm in. Now the price gave us a strong induction for it. Now what I'm going to have to do is I'm going to have to Control B, Control A, and delete to get rid of all of the markings here, because then it probably won't make more, it'll make more sense as to what I'm looking at. Well, on the H1, or actually let's start a bit further back. You know, there are reasons that I do think that USD CHF will be an extremely powerful long, which I've spoken about before, namely because the price has taken in this year the low of last year into a very key area of demand. And as we've looked at over the range here over the last, let's say from 2012 until recent, USD CHF has been in a long-term range. And the reason simply is because the price hasn't returned to the supply liquidity that derived the last major multi-year short, which is here. So the price has made attempts, but hasn't reached it. And lockdown really, that price action during lockdown didn't really have an effect to do anything long or short just yet until getting towards the end of the year when interest rates are low. We had the induction here, which was the trigger when I knew that inflation is going to become a problem in the years to come. And surprise, surprise, we have a new name called the cost of living crisis for everything. So now, if we look at price action that has happened, the price at 1.08295, which is where price action should be. So if I drag this here, 1.08120 and above, this is where supply liquidity is. And when the price gets into this area, I promise you news will start to change and the dollar will become bearish. They'll probably start reducing interest rates again and the cycle will continue. But for the price to really give us a long, which is why this long is so instrumental, we need, you know, a very extreme long. Now, looking at the price action here, I expect the price to give us entry into supply over here. And then from there, we should be looking for a short. Now, if I was to draw the ABC structure now, in terms of price action here, let me just draw this out. So this is A. All right. Structurally speaking, this would be B over here. All right. So this is B. And then what we will do, C would be over here. So the C structure would be for the price to return here. And this is why this stop hunt of the previous year is so powerful. But now I know that the price will give us an extreme short, because what we need in order for USD CHF to give us the final bout, as you can see here, price has taken this previous Friday's high. What we need the price to do now is to give us the return to origin, which is this movement here. So this short that I'm taking is really just the last kind of short before the price takes off for an extreme long. Okay. So this is why I'm in the short. Now, my short-term targets that I have, it's here. So if I take this over here for you to see on the H1, my short-term targets, guys, is this area here. So this demand zone over here, the price didn't return into this demand zone. There's an illusion of it, but the price hasn't returned to demand over here. So as a first kind of simple target, what I do expect the price to do is to fulfill unfulfilled deficiency here. But judging by the way the price is going, and to be fair, one of the reasons why I didn't take USD CHF long from before is if I was to go down to, let's see if I can do this from here. Yeah, so on the H1 time frame over here, if I draw this demand zone out here, notice that the price, when the market opens for USD CHF in the new Asian session, okay, the new day basically, the price didn't return to the demand zone before taking off long. It looks like it, but I'm gonna have to zoom in very microscopically, you know, some microscopic viewing here. If I take off this line, you'll see that there's a very strong revelation here. This unfulfilled deficiency does mean a lot. Let me take off these markings here. what's it called? So if I draw these here, you can see that there's a small gap, probably a 1 pip gap, but still I'm going to have to draw this out because it's a key to understand what I'm looking at. This is why I believe USD-CHF is about to give us one more strong short, and why I think the dollar index is going to do scenario 2. Okay, so if I draw this arrow here, I'm going to draw this arrow here. We have unfulfilled efficiency. This is the key here. Let me just grab this. Give me 1 second. So we have unfulfilled efficiency of demand. Okay, so I'm going to put unfulfilled efficiency here. So this is unfulfilled efficiency of demand. So UF. And then after, what we'll have over here is, I'm going to put here H1 demand. So key H1 demand zone. Okay. So this is our key H1 demand zone. And this is important here, that this is the new day open. This is the key here. So new day open. So new market day open. All right. So I'm going to put this in red, put this at 8. So this is the new market day open here. And what we've seen here is that the price didn't return to demand. So I do think that the key is that for USD-CHF to really get going. Now, this is why from the demand zone target here, my second trade will be from here to here, which is another 100 and plus pips, which is good enough for me. All right. Now I'm going to take a screenshot of this and keep this and post it out to everyone, because this is a key where I think the price is most likely going to give us our entry to go for the long from. Okay. And it's been I think the market has been very wonderful in this month of March, and it usually is. What do you call it? I think that this year is going to be a fantastic year of trading in every regard. So let's put this here. Just saving that now. So ideally, what we want is to have a situation where, you know, the market gives us enough time to get in, and I believe this is what we've had now. To explain what I mean by this is that, okay, we've had this movement, we've had a break of structure, but we just need this one more entry to fulfill the efficiency, and that's all that's really missing. So this is kind of like our last move long. This is why all pairs are moving in the way that they are, because this is like the last kind of movements, if you want to call it that. This is the last chance that we have to kind of get in the way we want. Okay, now I'm holding on to positions, watching to see what the market is gonna do. All right. I know that there's, you know, there can be reversals and stuff, and if the reversals are too strong for me, then I would be out personally, but doesn't really matter. I do think that the price is creeping up to a place where it looks like it's going short, but I have very good, strong conviction that we are going to go for a long. Just going to have to be a little bit patient there with how Euro USD is behaving, because I know I'm in it, so I want to make sure that I don't lose out on my position. All right, so let's see something on the H1. Just want to make sure something. Okay, it hasn't even come back to this supply zone yet, so I'm not going to buy that the price is going short yet. Just going to hang in there a little bit. So yeah, this is really the trades that I'm in. And this is what I've been looking at primarily. I know that there are more pairs that the price could, you know, go and do a long on. For example, AUD-USD, which AUD-USD was a slight disappointment because I wish it filled the whole gap, but it left a little bit of the gap and went long. But I guess it's also a very nice, obvious sign of when the price is going to go short, because you know that the price will have to fill a gap such as that. Now with USD, CHF, AUD-USD, and the pair correlations we have, it seems like the pip distances are a little bit different. And from judging by the way the price is behaving, I hope the price does come back up here, but sometimes I wonder if the price may just stop maybe somewhere here, for example, which is like a secondary supply zone, you know, deriving the liquidity from this bigger one, this larger area of liquidity. Sometimes I'm trying to figure out, you know, the price in that sense. But again, the map of when to know when we're coming out of the longs on XUSD pairs and the shorts on USD X pairs. So stuff like USD CHF, USD JPY is going to be the same thing again, which is this, the dollar index. Okay, right now you can see if I just drag this here. All right, we're back inside of this demand zone. We've had a little bit of a reaction. Okay, this little kickback in reaction is because of the demand liquidity that was left behind. But from judging by the price and the velocity of the price, I do think the price will break past here. And that's why I guess Euro USD had a little pullback just now. But when it gets into here is where I want to see what the price is going to do, you know. Now, if I follow the H4 candles, this says 11 o'clock, which at the moment, server time is completely different for me anyway. In the UK it's 3 hours ahead. So right now is 1:57 UK time, but it says 4:57 market time. So based on that, this next candle that just opened says 3 o'clock, so 11 till 3. So of course is a H4 candle. Let me do something here. It starts from here. So I guess it started at 12 o'clock. So I guess it's probably, I'm trying to figure out in my mind the maths, because I've been trying to figure it out and I keep dropping it and then coming back to it, coming back, dropping, come back. But I'm guessing the next H4 candle is not going to show up until 5 o'clock my time. I'm guessing, but then the market's been shutting at 9 o'clock, and I'm sure that there should be, yeah, I think there will be a candle at 5 and then a candle from 5 to 9. Yeah, so from 5 o'clock. So I guess this is like the last H4 candle of the day. Now, the best way to do this is if I stay on the H1 and we calculate how many candles we have. Let me just do this here. So if I stay on the H1 over here, let's just see how many candles we have for the day. Now, there should be 24 for the day. Oh, I guess the market is not open for dollar index. Oh, let me just double check this, make sure, because I'm really trying to figure this out. All right, on the H1, there is a period of time when the dollar index is not open for about 2 or 3 hours for us. So if it's about the same amount, let's go same here. 20 candles, 21 makes a new day, so 20. All right, so 20 hours, I guess. Let's see how many candles we've got here. We've got something similar. I've been trying to figure it out, guys, okay? So don't judge me for it. I've been really trying to figure it out, and the maths is not coming. Like, I literally keep drawing a blank, as you can see, and I don't mind saying it. But anyway, the key is we want to keep our eyes out on this marking here. I'm not getting rid of it. I'm keeping it as it is. I want to see what the price does. I'm sure the price will break past here pretty soon. You can see we're getting to the edge of this demand zone here. So the liquidity for demand is gone. The next place to check out would be here to see where demand is. But I still, looking at the price and the analysis we've done, we have about 150 pips on the short side, which makes sense on the long side for like Euro USD to go long and USD CHF to give us that final move short. You know, so I'm judging the price carefully and taking my time, of course, watching what the market does. You know, again, you know, even looking at Euro USD, just a quick pullback that it did right now, I guess it's to try and get people to start shorting, because the place is in an obvious shorting area. But because the origination of this liquidity wasn't fully unfulfilled deficiency, was in unfulfilled deficiency, sorry, and wasn't fully in deficiency, I should say. It did have supply, but not the correct one. You know, it makes a good angle for people to start selling. But it doesn't mean if the price starts to reverse too much, for me personally, I would be out. You know, for example, I'm looking at small but mighty M5 zone of demand that the price is kind of bridging above now. So I'm still in play. But if the price had closed inside of it and started to go short, then I would have kind of waited or come out and stayed at the last supply zone area. But as you can see, the market is still pushing long. So these are the kind of things I do. I have time today to look at the charts. As I said, guys, I'm still developing the Python stuff for the price action that we're looking at. So, you know, be on the lookout for what price action the market may give. But you can see the price action is getting extreme on the market. Now, gold, I'm happy that it is going short. And if for those of you who are correlating, you know, trades that people that trade correlations, then you've probably been wondering, why is silver and gold going short, and then Euro USD, USD CHF, why are they doing what they're doing? Well, currently inflation is a major issue. And central banks use their gold balance sheets to be able to leverage and manage the currency, or they leverage gold to manage currency strength. Okay, so what I've noticed is that when gold is going short, you'll notice that things like AUD/USD is going long, which is not the normal correlation, because ideally, in fact, Australia's major one of their major exports is gold, and so there should be a strong correlation. If gold goes positive in value, so should the Australian dollar. But you're seeing that in this last hour, gold is actually making its way short, and you see things like USD CHF going short. Now, you guys should know by now about what's going on with Credit Suisse, and UBS is agreeing to take over Credit Suisse for 3-point-something billion. So, there's a lot going on over there. Now, as an economy, Credit Suisse is, so Switzerland and Credit Suisse, of course, it comes from Switzerland. They do affect the market quite a bit. They offer a lot of loans. There's a lot of things tied with Credit Suisse, and it's having effects on the market. Now, we've already had Silvergate go under, and Silicon Valley Bank too, which is another major problem. So when you're seeing gold go long and other pairs, like, for example, Euro USD going short, the reason is because they're selling and buying gold at very fast paces with their market order books to kind of keep their currency strength, at certain levels. So in terms of pair correlation at the moment, right now, fundamentals have taken over. And from a technical standpoint gold is in the very, I'll say, in very critical areas of supply, which should produce the short that we're looking for. In fact, on the weekly, and I wanted to kind of draw this to your attention, guys, the price has come back to this weekly supply zone area. And this week we've had a weekly induction, and it's come to I'm not a Fibonacci trader, but it's hit the 86 level on the dot. And now where gold is probably one of the best places to look for a sell entry. Now, of course, the gold will have to give us a little bit more than this to just take a short on it. But if you notice gold going short right now, if I go to the M1, just take a look at gold going short. And if you look at things like Euro USD right now, you'll see Euro USD is going long in the same minute time frame. If I do AUD USD, similar thing, price is going long, gold is going short. So that means that correlation is completely off, and the reason is because of the economy. Remember, inflation is the major issue, and gold is a hedge against inflation. So you will find these kind of correlations happening more and more often in markets like this. In normal market conditions, when gold USD is going short, then all the Euro USDs, AUD USDs are going the same way. But in this case with gold right now, because of the nature of what's going on, the price is acting slightly differently. So for me, I'm excited to see what the price has to offer. And I think I still would be probably closing my trades and re-entering, just in case the volatility gets too high. I won't lie. If I come off of this session and you don't see me in the trades anymore, it doesn't mean that I gave up on the price. I just do think that I'm being a bit precautious, or is necessary to be precautious right now. But you can see the correlation that's going on. So my advice to you guys is, as always, keep your risk management tight. Now, what I do want to do before I go is just quickly go on LinkedIn and have a look to see, what, let me just check here. LinkedIn. Excuse me. I'm getting rid of LinkedIn and I'm saying to go to LinkedIn. Let me go to FX Street over here. Now, as always, we need to check the news no matter what's going on. Please always check the news, guys, because the news is not our foundation of how we trade, but the news gives us the context as to what time we can expect certain things to happen. There's certain technical moves that you should be expecting to happen or would be expecting to happen, but you would need the right timing or time frame or reference of time to know when the liquidity could be there for that to happen. So, for example, right now we have the European Central Bank's President Lagarde speaking, and she's going to be speaking, I don't know for the whole hour, but she's speaking at 2 o'clock and then again at 4. I don't know where she's speaking. We can check it out to see. To be fair, probably, let me see what can I say? I don't know where the speech is going to be, but on their YouTube channel, they usually show, what's going on. But as a result of that, this is one reason why maybe Euro USD, I might have to come out, because if she's speaking, Euro USD might end up becoming highly volatile in a bad way, which wouldn't be good. But then it could also come out to be good for us in the sense that because of what's gone on with the situation as pertaining to the Credit Suisse, she may speak on it and it may cause the euro to shoot up. Okay, so the rest of the week we have the CPI for Canada, which is going to be interesting to see. And if it is negative, then I wouldn't be surprised because they've halted interest rate hikes, which means inflationary hikes are working in the Canadian economy. We have Wednesday, we have a lot of pound news, more speeches, and then we have the interest rate decision this Wednesday. So the dollar is going to be absolutely crazy. And it's expected that they're going to hike rates to 5%. So we're in for it, guys. Thursday, we have, let's see. Thursday, we have the wall of fire, as I call it, and it looks like we're going up to 4.25 for the pound, but we'll be able to check and see. But again, this week is a very volatile week, so there's going to be lots of opportunity to profit. All right. I will be going through the news again throughout the week, and I think that we should be paying attention because right now there's a lot of news going on, guys. But I'll leave it there for now to keep it short and sweet, and I'll catch you guys later on. Everybody take care.